What's up, guys? This is Gil here. Welcome back to my weekly updates. This week, I'm going to go more in depth than last week on my portfolio. I'm going to specifically show you each one of my pies or slices, I guess. That's what M1 calls like subsections of your portfolio. Um, yeah, and I'll show you the differences between the person that I watch, which is Joseph Carlson. He's a YouTuber here with a growth dividend stock portfolio, which I base my portfolio on. Well, now I have quite a few tweaks compared to his, but I'll show you both of them. You guys can take a look. I'll also leave a link down below for his channel, so you guys can take a look at his stuff. I'm not sponsored by M1 or him. I just like both of them. So let's take a look here. All right, so this is my portfolio on M1. As you can see, I'm at 1706. So far I've earned $1.11 in dividends. I've had 78 cents in market gains. This last week we've been pretty rough. I lost 14 bucks. I'm still up overall, but with there's a lot of volatility that's going on, right? So let's take a look inside here. So as you can see, I have 10 different slices, which is like, sectors that I've split my stocks in. I've tweaked quite a bit from last week. If you take a look, as I go on, I make it my own, because I did use Joseph's pretty much as a template. So my biggest investment is 20%, which is in real estate, which is REITs. So we got quite a few REITs here. I've added one and removed one compared to his. I'm going to make this more aggressive than his overall, my whole portfolio. You'll take a look right now and we'll see what the differences are. But as of right now, I am more aggressive. So these are the REITs I have them in. I did add, Chimera? Just because as I was researching, I like this one. More than one that he had on there. Give you guys a couple seconds to take a look, but this sector either gets hit really hard or it doesn't. It grows. Yeah, the dividends are awesome though on REITs. It's some of them are like the Chimera is like 9% on dividends. Let me go over here. Say the dividend yield is 9%. I mean, it went through like in 2007, it was still paying out dividends. It's a solid choice. The average share is 2021 right now. So hopefully it does well for me compared, to the others. But this is my real estate slice. So let's head out then we go finance. Right now, these are what I have in finance. It's pretty much like his, except for all the percentages are different. On the Canadian banks that he has and my T. Rowe Price, I dropped it down to 5%. Right now, I have bumped up my Bank of America stock. I still have to, once I put more money in, this will go up. Right now, it's at 23% that I physically have, of my portfolio in there, of this slice. But it will go up to 33%. So as I put money in, M1 Finance will, put more money towards Bank of America than the rest of them. All right. So now let's go to healthcare. Healthcare, I have, the big ones, Johnson & Johnson, Pfizer, a couple more good ones, United Health Group. This one I will do a couple tweaks over time. I need to research more on it. So right now I just have a couple of safe stocks that have grown over time, dividend wise. But I want to see if I can get a little bit more aggressive on this thing. But we'll see. I have to research. I have to put them into Seeking Alpha to see if it would even benefit me. Things like that. So my next slice. Let's go over to the next slice. Okay, utilities. Utilities, I got hit hard, as you can tell. I lost a couple of money, but they're pretty safe dividend stocks. Again, This is the same that Joseph Carlson has. So as I research more, I will be changing these to something that I feel more comfortable with. But so far, these are actually pretty good. Over time, they have grown their dividend. I want to mix in growth and dividend and see where that I can go. So it's not much to see on this one. All right, so now we're on the tech, everybody's favorite, I guess. Okay, so we got Apple, Microsoft, Broadcom, Visa, and Cisco. Again, pretty basic stocks to have in your portfolio. Microsoft and Apple are the biggest ones. Visa is pretty good. He did have Comcast on here. I removed it. I just don't like Comcast. I'd rather mix it up and put it into these. These I won't change much unless I find something that's, something that I don't want to miss out or I think will do better than some of these. So let's go to my next pie. Boom. What's it? Consumer. So, all right. So consumer pie. All right. So, I did change the percentages on this. Compared to his, I do also, I almost switched out Home Depot for Lowe's, but, Home Depot's just killing it. I mean, seriously, the last 5 years have been crazy for this thing. So, I just decided to keep it. I have Disney, of course. I love Disney. Costco is an awesome company to own. It's just a great company, how they run their business, everything. Even though their dividend yield percentage is pretty low, it's a great stock to hold on to. Let's see, the next one. This is the biggest differences from mine to his. I was overweight at one point, $268 in gold. I went down. I rebalanced pretty much. I dropped it down. I also dropped it down to, I think, 8% of my portfolio. Yeah, as you can see, it's 8%. So this is the biggest difference between mine and his portfolio is that he has stocks and bonds 20%. Bonds, just straight bonds. I decided to do 8% gold, and then the rest is going to be stocks. I'm more aggressive over time. We'll see how it works out. But according to my research, I'll show you guys the graphs and comparing them. It just depends on how risky you want to get. Again, it all depends on how long you're going to hold it and how risk tolerant you are. So let's go to the next one. Energy. This is completely different from his. He had like Exxon and something else. I forgot one of the big companies. I went with these two. After researching it, it just seemed like a better choice. Their dividends are great, 7.51% dividend yield. Their companies, over the last 5 years, they've done great. Both of these, this one's 10.37 dividend yield, and they keep growing. So hopefully, we'll see how it works out. Again, do your own research, find out what you like, which companies you want to do. For telecom, I mean, there's only two, right, that I like that I would go with. It's Verizon and AT&T. AT&T has killed it the last couple of years, but we'll see where it goes. Okay, and finally, industrial. This, of course, I have 3M, Union Pacific. They've been both great stock. Boeing has been since I bought it, and because of those the 737 crashes, it's been hurting the stock. But we'll see. We'll see how it does. I'll evaluate. Right now, it's cheap. As long as they can keep recovering from what happened to them, I mean, it's a giant company. There's only two companies that, make planes, so Airbus and Boeing. So we'll see where it goes. I'm going to reevaluate as I go on. Again, it's a brand new portfolio. I just want to take my time and research everything. Waste Management is a great company to invest in, but they had a debacle. Was it like the early 2000s? So, and even they got passed. Like, they've been a great stock to hold on to. So that's pretty much it in my portfolio, guys. Leave any comments down below if you have any tips or any ideas, and I can research it for you guys and see if it would work better or not. If you guys do like or want to try M1, I will leave my referral code. We both get like $10, I think, something like that. Before that happens though, let's go over the performance for this. So this is my portfolio, right? Over 1 year, right? So if it was from November 11th, 2018, we saw December of last year was crap. So as it goes up, it went up 12.47%. Over 3 years, you're looking at a growth of 44.55%. And over 5 years, 45.82. Okay, so this is the growth portion of my portfolio. This is his. So see how he has bonds, right? 20, which make up 20%. He uses these long-term and short-term bonds to as a safety net, pretty much, which is not bad. It depends again on your tolerance for seeing your market fluctuation. So I rarely look at my portfolio to try and overcome that and see where, I just want to, I'm 30. I want to see where it goes. So we got 1 year, he's at 11.24%, which I was with my portfolio 12.47. Now the biggest difference goes to year 3, right? So he's at 32.57% overall growth. 44.55, right? Now we're both dividend growth portfolios. So mine is just much more aggressive. That's over 10%, I believe, right? Yeah, it's over 10%. So, and then finally, I'm at 45.82, and he is at 36. So, yeah, guys, like I said, we'll see how it goes. Again, it depends on your tolerance of seeing your fluctuation in the market, your portfolio going up and down. The whole point of this is just invest, guys. It doesn't matter what investment style you want to do, what strategy, but as long as you're investing, it doesn't matter if it's crypto, whatever you study, go research and invest. Thanks again, guys. I'm going to post this up, and again, thank you again, and we'll see you guys next week.